despite the action, big down action today. That's okay. We talked about a couple HSI signals that developed that looks like they want to do something off of those triggers. Just triggered last night on a lot of crypto. I think it's going to be a situation where it's more time. You see, I'm not so threatened by today's singular down move as much as we see these instances repeat over and over again. So the real development, I mean, the larger possible, do you really have something going on here? I think with all of that, it's going to take more time, no matter how you look at that. So if you're looking for up, be prepared to be sitting on it for a while. If you're looking for down, which is looks like this wants to set up for a continuation, you're looking for more days like today. So what happens, not necessarily today, but let's see what happens tomorrow. Let's see what happens into Thursday. I think there's a lot going on. Clearly, we know the deal. Ethereum's ruling the roost in crypto. What happens in Ethereum? It used to be Bitcoin. I'm now convinced what happens in Ethereum happens in the rest of the crypto market. I've said last week, bump stops, probably even more so now than even a week ago. So for Ethereum, let's call it 1480, be a little conservative, allow a little more tolerance. That stop level used to be 1430 on Ethereum. And we'll know if this isn't a one-day thing where this uptrend continues, it's going to take more time. So retesting the pattern and what have you, still possible. And you're still squeezed between these lows, lower end of support, current support, but you could easily come back down and retest more time before you try to make another attempt at this. HSI is what's doing it, folks, and I want to point this out. We mentioned this yesterday, that this was in the zone, was looking to come out, and it's done so, did so in yesterday's close. And then today is a 3-bar reversal, by all standards. 3-bar reversal of this uptrend is something to watch, where simple price action, that's going to take more time. That's what this says to me. I mean, it's a little bit, got to remember, just a week ago as well, you had that big downdraft, 10% down, and then a 15%, 20% rally. So this thing remains volatile, and it's all reaction, still reaction behavior. Let me check something. Microphone's low. It might be a little bit low. Boost it. Yeah, okay. Yeah, it was a little bit low. Thank you for that note. What's going on, chat? Great to see everybody. Bob, did you get the book? Bob Walters is here. He won a book last week. Market Observer. Scotty, what's happening? Costa. Hi, Miss Stephanie. How are you? Grifflet, the rest of the crew. We're here Monday, Tuesday, and Thursday. I'll be back on Thursday with Mitch Ray. So I might give away a couple of books early, and then we bring Mitch in here. Mitch and I are going to be doing that show in Vegas in a couple of weeks. Should be a lot of fun. We'll do it so that for those that come on Tuesday, I'll tell you guys when we'll give away the first book. Maybe we should do it like that as well. So if you're here on Tuesday, I'll let you know that, some days I'll do it, some days I won't. Thursday we'll do it. Thursday, the first 2 people into the chat that type V3, you guys win the books. Let's do it that way. We'll get it out of the way early on Thursday. All right, so there's your chance. If you've won a book, please allow others to win. Or if you really need the cash, you can take it and sell it on eBay. I really don't care. Let's get into it. Ethereum, smackdown. This was almost 1,800. 1,770 was the peak. But remember, all right, this is a tough, there you go. It's a tough call here with what happened on Ethereum off the Gartley. Oh, there it goes. 1 second. I think it's Coinbase feed. It's on all the feeds. It's just slow to load. Hold on. Come on. There it is. Sorry. So the Gartley Type 2, here we are, doing a bigger Type 2 pretty quickly. And no confirmation. Probably not a trade we would have taken to be short. In fact, I was saying, okay, let's look for a pause because there was no confirmation. This can happen. All right. Type 2 of the Gartley, that now caps immediate upside resistance at 1750, 1780. And then support, I think it's pretty clear. You're down here trying to ride this uptrend line. That's off the low. But with any of this, look, here's the lows. Here's the 1, 2, and now you need a third low. You need a third low, you need a third HSI signal if this is going to remain intact. Otherwise, if it's going to bust here, you break under 1521, you're done. We've been saying 1480, but we're not oversold. We haven't come down on that 4-hour yet. It's a problem. It's a problem. Here we are back to biting nails like we did a week ago. But I think it's clear, 1480. I'll say that, and that's probably for the whole crypto market, if not the whole stock market. Here we go, 1,000 points. It's second week of September. October's right around the corner. Let's look at Bitcoin, because that thing has been whipsawed. There you go. Amazing turnaround off of 18,500 all the way to what they got to 22,500. Amazing. And take a look what that was. So what can we gander from this 4-hour chart? Check out the shark on Bitcoin, okay? But look what it did yesterday. It just, I think there was a lot of distraction, didn't even catch this. 22,659, folks. The recent peak was 22,800. So you tell me what that is. Looks like the end of a type 1 and then went into a sudden return for retesting the shark hop as low as 18,832. Or wherever the next HSI comes in. Okay, I mean, we're down here almost oversold across amplified and HSI, but you need probably 4 to 8 more hours before that does anything. So that can get down to a full retest of the 886, which is, what's that, 2253. 886 off of that shark, that's a minimum retest number, 20,253. Yes, Scotty, that was a type 1, now a wicked type 2 return. Really tough. This is, look, your confirmation came below target 1. There was the confirmation, the first counter HSI coming off of that zone, but we want to see it with target 1. I mean, typically I want to see an HSI up there at target 1, and I had a problem with, I said, okay, this is, yesterday I was saying this is almost oversold. But it's not until it triggers. And that happens. A couple of constructive things, and I'm not, I don't want to be reaching here, but listen, you have to watch what happens on both amplified RSI and the 4-hour and HSI, because it would have to essentially, that has to be a one-off thing. So where's the breakdown point for the whole deal? The official point for Bitcoin, like where does this thing get nasty? And when? Does it do it now? Is it going to break down the June lows? We're going to go back and just kind of like come back even to what happened in September, early September, August, and go back down to these levels well under 20. For right now, off the shark, I want to just watch. When does that trigger? When's the next confirmation? Okay, but you're in a return off phase off that 4-hour. I mean, that just got smacked, which, okay, speaks to how reactive this market environment is. That's this is going to build. I'm going to watch this closely, but these reactions as they whittle themselves down, you're going to hit a point here where I mean, I've been saying this for a week. There's no, you go back, you want to go flirt with these lows. It's not going to take much to essentially wipe out the entire scenario, bullish scenario, where you just go back to the weekly numbers and you wait. It's been a lot of reactive opportunities, but that's all they've been. Here, that 4-hour shark, right up, coming on right back down to do the retest, to do the type 2. And if we're there and that's a part of our framework, that's how we look at all of these structures. Okay. I'm surprised by the single candle, but the rollover, just shooting this gap back down to the pattern at a minimum has got to be the guide. That has to be, even for now, this week, that's where you look for this thing. I mean, no HSI, which is not, well, that's not the ideal scenario, but this has been doing that. Crypto has been responding in irregular ways, I'll say. Kind of drawn out reversals, reactions, and then just whipsaw movements. Hit a target, and then you're right back down, right back where you were 2 days ago. How do you know? Here's a market observer is asking, how do you know if the shark type 1 will be a 5-0? Or do a shark type 2? Well, the first reaction off the shark, and here's the question. I think what you're saying is down here, when you're developing into a shark, right, you don't know that it's going to go to a 5-0. What you're looking for is a minimum reaction. Target 1 for the shark is the 50%, which is different than other patterns. The target 2 off the shark is the 886, but what you typically do is you are more reactive in this pattern than I think most. The shark's reactive, the 5-0's reactive too. But the shark, I think a lot of people would attest to saying and empirically agreeing, after if you've seen hundreds of charts by now, I think a lot of you would agree that 5-0s and shark patterns, not only are they reactive, but they like to do a type 2 retest. They like to go through, express a larger consolidation. That's their nature. So I would look back down at that. Structurally, the minimum level is 20,253. But wherever HSI lands in that area is what I'm watching. And it's close. I mean, it could happen closer down to that 20K level. You're 20,800 right now, and you're hitting the oversold. Let's see by tonight. Quickly, if we want to watch and see if things are going to fall apart, I still say Binance coin is the one to keep an eye on. I wanted to mention this briefly, that, look, it has this small pattern. And we did do, it's so close, it's difficult to see. And it's something where, okay, we certainly have confirmation, but Binance coin had a bat pattern. Now, it fell, it was less than 1% of the target. Target level was 256.60. The low was 258.30. And then it did a 30-point move. Now, is it a type 1 or is it a type 2? Because it didn't hit the target. By definition, if we want to be super strict, say, oh, well, it's still a type 1. At a minimum, either way, if it's a type 1 or type 1 with confirmation, although that's really what that is. Okay, this possible type 2 gives you 2 downside objectives, but I would think because we didn't hit 256, a chance of nominally even just coming back and hitting 256. I've seen that many times. It's an odd phenomenon when you fall just shy of the numbers and then have this tendency to come back and revisit it. That's what I think is going to happen here. So if Binance Coin breaks loose on the downside, let's say we get down to 257 by the weekend, and then just kind of falls apart there. That's a sign where if crypto is going to do the big breakdown, you're close. Because if Binance Coin doesn't hold this, or it decides that this pattern is going to lead to something bigger, what's that say about the rest of the market? I think more time. I think more time. Even if we came back and did want to retest June lows, it's a possibility. It was, down 1,000. I mean, what the heck? Let's get to the markets. Dow's down 857. Almost 9. Would be great if it was down 1,000. Really. S&P over 115, 120 was earlier. And then NASDAQ futures. They were down 450 earlier. That's a 1 minute today, but this is really what we're talking about. Is this another type 2 without confirmation? Look, we were looking for HSI to trigger. Give us some kind of confirmation. Let me take out all the other lines, patterns, whatever, and just retrace this. That's your Gartley. All right. That's the little Gartley. Did a type 1 reaction and then came back and did this really ugly retest. But in the process, it hit the target 1 at 13,307. And that was off the bullish pattern way back. A couple of zones down here, but generally 11.8. That's NASDAQ. Still, and I did mention that we would see a lot of, I think, short consolidation segments because you went to type 1 reaction, you come back, you retest. This bar today, I think is a surprise bar, but it's happening at an important spot. Plenty of time. Again, what happens in the next couple of days, I think is more significant. But if you're at a type 2 here, then whatever this sloppy retest is, if it starts there or if this is really it, you're not going to satisfy the whole corrective phase. And that's what it is. Until you get down to this target 2 or even 11.5, some of the numbers from back in June. So we're what? September 13. Going in, where will we be in about 30 days? I mean, really make a run 30 days from now and then try to take out or retest the June lows, 11,000. If this follows through over the next, I don't know, we come back Thursday and we're lower than we are today. We're below today's low. I would say then, yeah, we're starting that second leg. I mean, even if you did an ABCD, look, if that was A to B on the downside into early September, and if that's your C point, someone said, well, how do we know? Yesterday they asked, how do you know if it's a C point? All right, well, you look at the structure, but we'll really know if it takes out this low from last week. That's around 11.8. Another situation where you bump stops. You bumping stops. Okay, you're anything under 11.8 from here, treat that like a B point. You're going to make a full, it'd be another 800 to 1,000 lower. You make the run at June lows. That's how you know. That'll be the break where it really kind of breaks free. You get under here and there's the June. That's what happened this summer. That's it. Another, week of summer? And then it's over. That's your summer action. Kind of ugly, especially with today. I mean, you couldn't even generate confirmation. I think that's going to be reactive. Keep that in mind. It's not an ideal situation. The only HSI that we had was right there on the initial test, and it was more about this bullish pattern. That's what we talked about. So I think, look, on a follow through of even today's low, a close under today's low. Yeah, that's a big one. Thanks, Eddie. Appreciate that. Yeah, you're gonna. I think Dave's saying he's going to take a shot of whiskey every time I say it's going to take more time. I think that's funny. I'll probably be drinking some whiskey in Vegas, but well, I'll talk to Mitch about that on Thursday. I think that's in reference to where the hell's the bottom? When the hell is this market going to bottom out and begin some kind of move, resumption of the long-term trend? I think that's the underlying question, basis, premise. And where's that long opportunity? And a lot of people out there saying, okay, oh yeah, June lows are going to hold. June lows are in. So, start buying the market. No, that's just a reaction. And when I say more time, yeah, you expect more reactive movement. You're in a really tight, I said this yesterday, you're in a really tight back to back pattern dynamic where you had a bullish pattern in June. Then you formed a bearish pattern that decided to do an absolute type 1, type 2. And now you have a tertiary, no confirmation retest. Still points lower. And that takes more time. And that could be a sharp drop down to numbers, and that's it. Or it can be more of a grind, and then you fail. You haven't registered anything on daily. Okay, that would suggest there's any concrete pivot about to happen. But longer term, I've been pretty clear about this. Why it matters is because if you take out the lows and you start failing again, as we've said before, then the only possibility is looking at this all-time 886 retest. I think that's why it's so critical, because people that know, people that are following along, understand that, like, every week, every monthly close, however these lows go, if they don't hold and you start rolling down, a lot of people know that move to shoot the gap, and that's a perfect BAM scenario to get down to that bat at about 7,800. That's the only possibility underneath here. And it's the only possibility under 11.8. Because then this whole thing from COVID low to the high becomes a big bat pattern, 7,800. And we got some signals. Hey, we got a lot of signals back in June. There's a lot of patterns that developed in June. But now we've seen a lot of these intermediate patterns that popped up that want to go through the 1-2. I mean, that's exactly what this Gartley's doing. Or check out Apple. I mean, I still say Apple is probably the number one stock to watch. This had a beautiful crab pattern, deep crab at 131. Right at the low in June, right around the second week. And it goes straight back to a crab pattern. But it still has to go through the 1-2. If you don't know that this has to do a reaction first and then retest, okay, before you could see a larger move down, it looks like a lot of just gyration. You say it's a choppy market, it's a light market, summer trading. No, it's a type 1 reaction followed by a type 2 return. Did we get to 168? Because that's officially where this would have been a type 2, even if it's without confirmation. And it did not. It didn't get there. How do you treat those scenarios? You wait. I'm still going to wait. For the larger opportunity is on that retest of that crab pattern. Tough price action though. Don't forget the bigger 175 level, even from last year, is something we have talked about. And it's this pattern, it's this big pattern all the way during COVID up to the 1618, beyond the 1618. And then your 175 had this was the type 1, down to target 1 down here, and then came back for the target 2. On the way of doing that, formed another pattern, back to back to back. I know this seems confusing if you have not seen this many patterns left and right. But it all depends on, did you hit target 1? Okay, did you come back retest? Because Apple on the first move from November all the way through to April had one big move, retest, and come back down. And finally hit target 1 down here at 145 back in April. That was the end of the type 1 reaction. It just that it went down to target 2 off of that pattern and formed another bullish pattern. My point is that why wouldn't we have Apple, if it loves to do the type 1, type 2, if it's almost at a type 2 bearish, okay, then, don't be surprised to see this with a possibility to retest that crab pattern. So 165, 168, clear resistance. Going to be resistance for a while, and you're going to need to come back and retest. Need to see that. Costa is asking about Qualcomm. Okay, yeah, that was a 3. That's a 3 ideas. Every week we have I put up a weekly 3 idea. This week I'll have 2. I'll show you guys that in a minute, but let me bring this up. Qualcomm's like a lot of them. So this is where, forget the news headlines, okay, and forget the 1,000 points. The Dow's down currently, or almost. What we're still looking for on most of these major markets, major stocks that did that kind of reaction move back in June, are on their way back down with a whole lot of back-to-backs where they're coming back to retest. 130, okay, and this is for Qualcomm. Look at the HSI that triggered yesterday, 2 days ago. That would be Friday. Was one day up, today slammed down. So the check back is a disaster, or so it seems. Just wait for one green candle. If you were looking for that as a trigger against the secondary zone here, I think I said in the post 886 at 130 was critical. And I think you're there. But with the check back kind of scenario that you're having, wait one day. Wait for one bullish candle. Give it a little more time. There's that more time thing. But it's a type 2. Type 2s take more time. If it's going to fail, this thing will just fire off three down days in a row. And you step aside. So today's nasty check back, you're looking for it to check back. And in that video, I said, look at the 130 level. At 886 at 130, as low as 127.82. You're 127.14. Okay, you're there. But with that kind of action, all right, I could wait a day, get a bullish candle before I look to enter that. But, it's in the spot. It's almost there. There's a few of those. We mentioned that. Tesla, of course. Look, Tesla, I'll stick by it. It's doing a 1-2. Look at that. We all know about the bullish bat here on Tesla. Down at basically 208, 201. But look what it had to do. And it's, this is where I want to automate type 1, type 2. I think it would be extremely helpful. But what you're looking for is terminal bar, bang. Now, where does it first hit target 1? 274.64. That's your minimum structural objective. Could you sell there and get out? Of course. But what about the fact that it goes all the way almost to target 2? Well, it didn't quite get there, but your job is to get to 274. The rest is gravy. What it did here is then, if you weren't out, your trend line didn't violate, or you were riding it thinking it's going to the moon and lucky to stay in it, you still had a bearish pattern in the target 1, target 2 zone. That was another sign. Okay, it's probably done. Or I'll use the expression you guys you don't like. More time. If you're hoping to see this thing blow through and just go to all-time new highs, if you see these bearish developments or you see these bearish arrows that are against your position, you're long something and you run into HSI arrows. If you can't convince yourself that it's time to sell or take or just get out of that position, at a minimum, you have to ask yourself, well, I see that, and I know that the way the harmonics work is that, even if it's going to be bullish, it's usually a pause. So am I willing to sit through that pause, or do I want to capture it now and move on to the next opportunity? Capturing it, moving it to the next opportunity is usually the best way to go. Even if you were down here on that Tesla, that first one, okay, and you hit target 1, 274, and you see this arrow. No, the arrow developed. Bang, okay. Same area, 275. Maybe it's just dump it at 275. No problem. The other thing that, look, this follows up with what I said yesterday. A lot of these markets have done off of those small patterns that developed. Look, they went and did a target type 1 reaction, and then came back against these tight zones. No confirmation, but for Tesla, 298, what is that, 20? So by definition, yeah, the type 2 started 2 days ago, but this is the first bearish candle. And if it's truly a type 2 to get back down to 248, you still need some more time. It did not hit HSI either. Look, there's HSI. Fell shy. Not ideal. Just keep an eye on this, but this is the framework where you want that to retest. We've talked about the weekly chart. Okay, look. That's probably the primary pattern. That's probably the best primary time frame to consider this, to consider Tesla, no matter what kind of position you're taking, where the long term is still trying to come back and validate that bat pattern. All right, that's 3 days ago. Last week we were looking at this, wondering if this was going to be take more time, okay, to retest and then roll over, especially because there's no HSI on the weekly. Because HSI is not working. Why is that? Let me fix that. Should be able to fix that pretty quickly. Hold on. I'll check that out tomorrow. I'll bring that in Thursday. But it doesn't escape the type 1, type 2 framework. And if you were bullish, extremely bullish, expecting Tesla to go to the moon, wouldn't it have to take out, anybody looking at this chart would say, all right, it has to take out these prior peaks. If this uptrend that started in June is something real, it's got to go now. So same deal on Tesla. You take out last week's low, you take out, see how we finish in the end of the month. But you're squeezed. Another situation to bump the stops because you start violating prior week's lows. This case under 260, 265. Yeah, then you begin that process lower. One or two more, because I think it's important. I said this yesterday. I want to see the retest of these patterns. A lot of big name stocks, big name patterns, having their setups come to ideal. I mean, this is ideal behavior. And Microsoft is the other one I mentioned yesterday. Okay, fitting perfectly. We look for the reaction. Again, type 1. That happened back on the, what was that, June 13th? Confirmation came in the 16th. And you're looking to go to target 1 at 269. Actually, 269.95. Well, it hits there, it blasts through, it makes it 281 before you saw any kind of bearish candle. Finally generates HSI up there. No check back. This is something I want to talk more about because I know it's going to help. I think, clarify. All right, when do I get a check back and when do I don't? I think I, I I think the explanation of really what you're using it for is critical. If we're using it for executions, yeah, we want to see a check back in most cases, especially on a type 2. If we're using it for trade management, then just the existence of it is a little bit more, I'd be a little bit more impulsive on just using that as a trigger. Like if I'm up here in the trade and then HSI comes on the next day or 2 days, especially on the breakdown, I'm out. Now, this return phase started a few weeks ago, fell right out of bed, and despite the last week's move, today's taking most of it back, checking back. But here's another situation where you need to see one candle, one green candle, before I would even consider that check back a real deal. And in the process, look, you have this zone. 1618 is at 241. It's a likely target. That's where you really get this. HSI is not nearly as consequential as something would be down here on the retest, the 241. All right, good. HSI is working on this chart. Keep an eye on that. Because if this came to the 50 and we maybe tomorrow we have another down day, which in this environment I think could happen, look for a secondary test. HSI doesn't normally do that. It usually runs from extreme to extreme. But a rejection at the 50 line also, here's amplified. That's a better one to watch because this, I've said this a lot with standard RSI and amplified. Whatever happens at the 50 line is going to determine if this is a reaction or something more substantial. The fact that you had one move up, complete rejection, I think we can all agree. Even at this point, you would say, well, it's too late. No, it's not. You're at a 33.22. It needs to get under 30, but that is still lower, and you're going to make a run to try to retest that technical low. That's another day, maybe 2, before you come in and then come out. If you look at it like that, and I hate to use this expression again, I'm not saying just say, oh, it's just an excuse. Oh, it's more time. No, what it is it's more time in the predominant trend. You're down. Just because you're down 1,000 right now, 900 on the Dow, doesn't mean you're close to a bottom yet. Even for this little flush. Look for that secondary retest. Then you hit that in the next 24.48. Then you're there. Thanks, Swooping. Swooping Hawk says amplified is a fast-moving RSI. It is. It's a baseline copy of the RSI formula, which I've said, but then I put some harmonic modifiers on it, and I also increased kind of the timeline for it so that we can see when something is either complex or impulsive. Because if we get a W or M formation at the extreme, that means something. This is impulsive. Both of these are impulsive on the downside or the top side here in the most recent test. 1, 2. And Wilder himself said, look for the double tests, are more significant than single tests. Keep an eye on it. That Microsoft, Apple, those are the two running the shop. and they have to come back. They're in full type 2 returns. Yesterday, last week's run, just a bounce. Just 5 days. 5 days of trading behavior, and it didn't really move much. And the fact that you could take back 3 or 4 of the last week's gains today is troubling. It's a little bit different than, say, I don't know, a few months ago or this summer, because you're back in that downtrend as well. Dow down 906. Let's look at, need to look at really quick the metals. Hold on one second. Let's bring this other one up. Metals and rates. There you go. First, let's look at rates. And it just comes down to the 10-year versus the 2-year. Here's the 10-year. 343. More important is what's it doing? What's individual price bar action doing here? Amazing. 10-year yield. About to break out to new highs. I would think that that's the one where, since you're all the way up there, basically close to the June peak. Remember the bat pattern we talked about? I think the hop level at 366 is, you're going to make a run for it now. And also, here's HSI. This is where HSI comes into play with bonds and tells us what's likely to unfold here until you actually pivot out. This is on a weekly chart, so consider this week up and until at least we hit the hop at 366. And we know that's been a negative influencer on, a bearish influencer on equities, risk in general. Need to see this hit and come down. The other one with amplified, if that does not pivot out like that, does not give you an impulsive move very soon, where later this week, probably next week, would have to be a bearish candle. At least one bearish candle to pull this down out of the overbought. If it goes up, and this is the thing to watch for, and I mean by next Friday, if this is still higher, amplified RSI is going to spend more time up here, and you will go 366, 369, 380 on this move. And we know what that does with the markets. Look, if I flip this chart over the S&P, all right, rates peaked in June, right where the market had the temporary bottom. Okay, rates bottom started heading up second, third week of June. We're fully going back in the predominant trend. So that, again, another example here of looking for that overall test of that bearish pattern until it gives you confirmation. There's no confirmation there. Look, more time. All the way back there, there's the sun icon for the pattern. Where is HSI? Nowhere to be found. In fact, came all the way back down, almost gave you a perfect bullish reading, but then came back up. Now we're in position where, look for what happens. If we roll over, we can generate an arrow. That would be the ideal initial test for some kind of pause or reaction, but it's not there yet. And it would need, like I said, you need 2 or 3 bars to even do a reversal. You would need a big week down to erase the last 3 weeks. And you're still not out of the zone. So that's where the stuff that happens with rates in the next 2 weeks is probably going to get realized now, up at 366 on that 10-year, the 2 years even higher. Here's the 2-year. Was that at 10? see here. 475. Wow. That's really, I think that's even more than I thought. That's getting way above. That's above the hop level. Do check out, this was what we traced out actually last time. It's kind of tough to see. This A point is slightly above that C point. This makes it a shark. And your 2-year yield at 480 looks like it's on a rope to go there. And there's nothing there that would suggest this is doing anything but a 1618 extreme impulse move on the rates. This ditch down to almost zero is now going to give you a 1618. Amazing. Also, HSI again. In this case, HSI, and this is trying to highlight this to help people really see how to put together the AMP RSI and HSI. First of all, just on its own, HSI, the fact that it's going up, you never want to be against that. You know, you don't want to be fighting an HSI move that is clearly headed towards the next extreme, no matter what. And so that's up, no matter how I would read that. Then I look at what's going on with amplified. Well, here's amplified. Did a complex. This is where your M formation, extreme overbought, but gave you an M formation, trying to come out, but it's just complex. That's a complex M formation. That means, here it comes, more time. When you see these big M formations, they don't typically, price action doesn't typically jump right down. You get into like a grinding consolidation, and that's still up. And this just turned back up into the zone. Again on a weekly chart. Until HSI registers, and this is a dangerous spot. I don't normally say that when you're there, but these indicator expansions, when they go on like this, even after doing all this work here, that means there's a continuation in that predominant trend until we get a minimum HSI reading. Something. Here's gold. And the gold deal has been quiet. Gold futures. Haven't covered it too much. Mainly because of the fact that it hasn't done much. But I think now you have to look at what's the possibility the floor drops out here. Let's go to GC. Back down 17, what is it, 1707? Yeah, still the bat pattern down here. It's an ugly type 1 bat pattern. I don't think anybody's disputed that. Just got the confirmation all the way down here. Your first confirmation really at the hop at 1707 came in 1720. You don't want to see these lows get taken out. I think anything under 1700 or a close under 1680, then this whole, look at the 1-year consolidation range. I mean, then you're threatening to go back towards 1600 or lower. It's surprising, but the gold has waffled. Here's the weekly chart. And this is probably even better. Back to back. Yeah, I think this is the one we were looking at. 886 at 1723. That is your key number. But no confirmation on this retest. You did not get to 1831 on gold. And I think it's been weeks. But I do remember saying squeeze between 1831 and 1723. You're under 1723. If you liked gold, you better see some kind of confirmation down here. Come back and retest. come back and then trigger something down here, but it looks lower. It looks lower for a while. And a lot of these markets that did not bust through, gold was another one. Look, even on that, from this downtrend from last year's peak, or actually it was January, 1, 2, 3. There's your third hit on the downtrend line where that couldn't even break above it, couldn't even test it, threaten it in any way. I would have to say that this, like all of those signs point to this thing doing a thorough washing of the entire zone. You'd come back down and retest even the lows. The lows on it go back to 1680 before anything happens. Nat gas and crude oil, look at this. Okay. Holding up here on the daily, it's a 2 of 2, and that doesn't change. There we go. Oh, UNG is the better vehicle. Look at UNG. There it is. It's a type 2. There's type 1 with confirmation. All right. How do you know? How do you know which setups have confirmation, which don't? You don't. You wait for it. That, in my opinion, it's something where if you can get over it and let things go, yes, you're going to see a lot of reactions where, hey, if you're here right at the 1618, sometimes, yeah, they do give you the beautiful type 1s immediately. But I just find it's a lot easier. And I know that if I have some kind of confirmation at a major hop level, for example, or a very clear pattern, there's a lot more things discernible within these limits that tell me, like, if this trade's going to work out, it's because of the confirmation in the zone. The confirmation helps me locate exactly within the range where to look for the trade. But my levels are still the same. And this one, UNG, did the type 1. It was down to 2186. Got down under 20 there, but 2186, that's pretty much it. The other thing, the downtrend was broken. And that's where you start the return. That was a really clear and clean return. Your 1618 was at 26. That was there. Look at where HSI came in. All right. Look, here's the thing about HSI. There's the check. There's the check back line, but checks back, green, green, finally red. That's what I mean about if you get a nasty check back like today on the bullish side, wait one day until you get a counter signal. You're looking for bearish. Well, if it blows through, I better see at least one bearish candle. And even that one just gave you a little move. Here's the secondary, tertiary signal. Now that has to be it. 34 on UNG. Still looking for a target 2 all the way back at 18. Off of that, this is where type 2s become sloppy, but still fine. All good. Laser D says he's trading Boyle. Remember what we said about Boyle, please. UNG might be the better vehicle. Boyle is just so volatile that you have to trade every move as a reaction. And that's like 110, 120 on the top side and 60 on the downside. And that's been quite nice. Most of I probably introduced most of you to Boyle. I don't know anybody that was on Boyle before I was really on it, way back at 18, or it was like $22. And then we have traded some of these swings where, look, we've had the beautiful crab pattern, type 1 reaction where 125, 120, and 86, that was your first segment. And then it came back for beautiful type 2. There's your secondary segment. And now a tertiary test. 124.17 on Boyle is that exact 1618. All right, just a lot of reactions though. It's not, I don't think it's one where you can sit there and guess. You pick your levels and you're like, I'm there. and I'm not wavering. Like if you have a target level, you take it. We were back on boil all the way back. Um, this was our second opportunity there at around 35, the hop. The other ones were all the way back down here around 20. Yeah, it's tradable, but you have to be aggressively trading that. One or two more, and I got to wrap up. Crude oil itself. Look, this thing's whipsawing like markets themselves. I'm really of the opinion that we have a small shark on the daily, 84, 85 bucks. Been looking at that. 89 even is the 113. We did register HSI, okay? But it's the second one that we've seen. So there's the first one, and it didn't yield much more than, say, I mean, that was ideal, and then still in a type 1 reaction, failed the trend line. In 2 days, you gave it all back. Same deal here, but I would look for a check back. 83, but super cautious about this because it's flashing some things. This blue Gartley all the way back at around $67. That's something that actually makes sense, and I mentioned this is a while ago, but if this is going to be a major peak at 125, wouldn't it do a 382? That's just my thinking. And so, been saying this for a while that even in a type 1 reaction, like I thought crude oil could go to 107 and have a reaction. It's not doing that. I would look at this whole spread, 382. Where does that take you? And maybe start thinking that. Commodities are still rolling over. Crude oil is doing much the same. Natural gas looks toppy. And then you're raising rates. 382 is at 67, 66.85. Be cautious. I really think so. Leave you with this one. The Exxon Mobil chart, which did have, it's a 2 of 2. That's a weekly ABCD. No, this was a daily retest here. Yeah, look. Beautiful deep crab. The 193 level was hit without confirmation, but was perfect. And this is the interesting thing that happened about ExxonMobil yesterday. Tough read on the pattern, no doubt. But your confirmation and check back came in below this zone. There's the 1618. But that's significant that you checked back, you got rejected. You could say that this type 2 on ExxonMobil, all right, is already completed and done. And what's that mean? Well, we go start looking for target 2 on that move. That's another kind of clue that looks like this thing is going to have more pressure on it to the downside. That if you were hoping for or looking for crude oil to do huge things, no, it's actually setting up with really nice type 2 bearish patterns. We can't ignore it. We need to be aware of, that's a micro development, that little check back, but rejection. And now today, yeah, an ExxonMobil could be well under 90 bucks pretty soon. We'll talk about that on Thursday, folks. I think just kind of hold in here. No worries about any of it. I just expect this return phase that we're seeing now. Looks like it's in full gear. So it's going to be an eventful 30 days for sure. Okay, folks, the first 2 people that are in on Thursday, okay, type in the chat, V3. You guys will win. They'll give away 2 books, and then we'll have Mitch Ray there too. Any questions, get to me at harmonictrader@gmail.com, and of course, get with harmonictrader.com for everything. Thanks again, folks. See you Thursday, 12 noon. As always, go get them. Have a great one. Take care.